Good morning, investors, and welcome, Zinger Nation, to the #1 morning pre-market prep show right here, where we talk all about the macro, the micro, and everything in between. So do us the favor, smash that thumbs on up, hit the subscribe below, and of course, hit that bell so you get notified the moment that we go live in the morning. Today's topics we're going to get into, of course, the sentiment for the week. We'll talk about bankruptcy out there. Tesla has a bunch of catalysts. We'll talk a little bit about Tesla. We got China stocks down today. And of course, Tim Quast will be joining us. Yes, Tim is back. So hit the like button for Market Structure Edge. We'll talk a little bit about some box office. We'll take a look at what earnings are coming up for the week. And of course, that'll lead us into live trading. Stick right here on the #1 morning show. And welcome to Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's go ahead and bring on the real experts here. My man, Joel Elconin here, stepping on in. How we doing today? Let's go ahead. Let's talk a little bit of what's going on in the futures action out there. Looks like we're back into bear mode.
A lot of red. We close on Friday. For those of you thinking about testing the low of the move, well, we're already below the low of the move. The futures are down at 92 handles, 38.0850, just 10 points off the low. So perhaps more work to do on the downside. Crude buckling down 183, 118.84. Gold in the red, $16, 18.59.50. Same theme with silver. That's in the red, almost 30 cents at 21.64. The big story of the day, down 18.14%. Bitcoin futures down $5,253, 23,670 for you guys waiting for a retest of 20K. Maybe just wait just a few more days. Ethereum futures, they've been leading the way on the downside, really, starting last week. They're down 27% or $447 at $1,216.50. Triple D. We're getting a test of the low of the move. I just kind of wish they would have just waited a little bit, but here we are.
Well, Triple D's a little busy. He'll be joining us in a couple seconds. He's got a couple things, but let's just do a little off-topic talk before we get deep into the markets. What about the favorite, Mo Dongle, winning the Belmont Stakes?
Very good race. Yeah. One or two New York horses that I wrote about. I picked the wrong one. I picked We the People, and he went out early in the lead, and I said to Lisa, he's going to die like a pig. I wish you could bet in the middle of the race. He just got out there. Mo Donegal ate him up. Good story. And there was an upset too in the Perfecta, but yep, New York theme reigns supreme into Belmont.
What happened to Rich Strike?
Rich Strike, I left him out. I just didn't. He was a one horse that one race, man. He just caught it. He caught it early. That Derby was just an anomaly. That's why the fact that he skipped the Preakness. I was like, man, if this is a horse, a super horse, they just delayed it one more. They delayed everyone finding out about the true character of the horse. Of Rich Strike, but it took until the Belmont. But people want to talk stonks, man.
All right, let's get into stonks.
We gotta go.
First, let's talk a little bit about the crypto news out there right now. So in crypto news, of course, the fallout has been stock. Bitcoin dropping about 12% throughout the weekend, trading below 25,000. Where are we at now? What are we looking at?
Well, I'm looking at the futures, and they're
Okay.
23,695. So I like to
23.
keep yeah 23.7. I'm not sure how much that trades off the cash, but I'm
Now
sure it's pretty darn close to that.
here's some red flag again coming into the cryptocurrency. Now, crypto lending platform Celsius network has suspended withdrawals and transfers. So this is definitely not going to be good for kind of the confidence out there. Of course, we had the whole Luna debacle. Now we're having some more platforms struggling exactly when you don't want the platform struggling, right, Joel? I mean, when you want to get out, you want to be able to get out. And I
There
think
you
this is
go.
causing definitely some worry in Bitcoin. A lot of people, love to compare these coins to Ponzi schemes. So this is not what you want to see as confidence if you're a cryptocurrency trader on out there.
Well, the number one thing is it was supposed to be an inflation hedge, a safe haven, right? And
Hmm.
now, at a time when, well, first of all, you have the rapid inflation, it's not reacting to that, but it's basically you can't get your money out. So that was one of my, biggest concerns with Bitcoin is was my money safe? Could I get my money out? Could I sell? And the couple trades I did in crypto a long time ago, when the thing went from like 6, 7,000 to 20,000. And I'm like, I wanted to log in. And it was like, just the spinning wheel. So I don't know what happened with that exchange, but the worst possible thing is when, it's like a run on the bank, right? You can't get your money out. And,
Yeah.
so that's what happens. We'll keep an eye on it. 20,000 is from where you broke out from, down 18,000. If you're long and you're doing, the buy the dip thing and you're continuing to do it and that's your strategy, then go right ahead. But when you can't get your money out when you need it most, boom, boom. And the stocks related to this, I know that MSTR, I mean, that guy's
Yeah,
who
all,
I've been
all
buying.
these all the
Oh,
Bitcoin stocks just getting crumbled, and this is where I could see some of them even going back to like penny stocks like Mara and Hut, and they're not turning around anytime soon, at least from what we're seeing. MSTR still having the most value, right? And so that's probably the one that still has some room to the downside, you could say, but it doesn't look like it wants to turn around anytime soon.
What's
So we'll see.
interesting with these stocks is that, when crypto had its intermediate rallies, like from 30,000 to 40,000, nice pops, like, hey, we're getting a retracement. These things just didn't have the same kind of move. They appreciated some, but they just, it was like there was just no interest in them. And so, whether that was that was a great sign to trade off for Bitcoin, but Mara, MSTR. What did they talk about? 17,000 where they get hit with the margin call. That's something like that. I can't remember what it said in the article, but not good, not good.
Yeah.
I just be careful out there with these things and NFTs. I mean, Ethereum's been your key. So if you're looking for Bitcoin turn down or turn around, make a rally, wait for Ethereum to do it because that broke down at the end of last week, and Bitcoin was still hanging around 30,000. In fact, well, it opened lower last night, so there you are. Good volume too in the futures compared to the previous days.
All right, let's go ahead. Let's talk a little bit about coming into this week. There's a lot on the radar out there, so we need to pay attention to see what happens. But the sentiment, of course, going into the week is going to be all looking forward towards two things, I would say. Of course, we got the FOMC that will be meeting on Wednesday this week to determine an extremely important interest rate decision there. Of course, we'll be watching that. But then we also have what? None other than the Quad Witch Friday coming on up here. And I can explain what quad witching is, Joe. I don't know if you want to try to explain it for us
Go
in
ahead.
your
I do it.
terms. So
Yeah.
I wanted to kick kind of more of a definition here for new traders that probably just don't know what quad witching is. They're like, what? Quad witching on Friday? Well, the term quad witching refers to a date in which certain derivatives, all these contracts, they expire at the same time, simultaneously. And this is very important because now you'll be getting 4 different types of contracts: stock index futures, stock index options, stock options, and single stock futures, all expiring at once. This only occurs 4 times a year, and it's the third Friday of March, June, September, and December. And as we know, we're coming on up there towards June. And hey, we're going to keep watching. There's usually some fireworks, right, Joel?
Yeah, they're turning points. A lot of times they're major turning points in the markets. Right now, we hope it's a turning point to the upside. But with all those positions being unwound, also like during COVID, getting into the fancy option turns, the gamma unwind creates some unusual volatility too. It's real. I mean, the true form is really a triple witch because the single stock futures never really made it. I mean, they're still in existence, but just like some people do trade them. They never caught on like that, like they wanted to. So it's primarily the stock index futures, the stock index options, and as well as the individual stock index options, and then the ones on the indexes. And also, it for money managers and bigger market participants, it's kind of like decision time. It's like, do we roll these losing futures positions over, or do we not? Do we let the contracts expire? A lot of fireworks on the open on Monday, and then of course there's a lot on the close. And when Dennis comes on later, when he talks about trading imbalances, closing imbalances and opening imbalances. These are the days where it matters most. So you'll see some very unusual activity on Thursday and Thursday night in the futures, and then you get the expirations. So got you set up for the week. I mean, the week is already defined here. The former low of the move was at 38.10, and they had no problem taking it there. They took it down to 37.98 and a quarter. Under that, I mean, I could give you some intermediate support levels that are going back. You guys don't want to hear this, but this is going back to March of 21, or early March of 21 is some of the lows. We're not talking about the we're not talking about the COVID lows yet, but we're definitely back at those March of 21 lows. And we'll see if we can get a turnaround with the quad wedge, what the Fed has to say. Maybe we'll dial up blue. See if we can dial up blue and Putman from the
Of
CMEs.
course, we're going to dial up blue. You know that, Joel. But you know who we're also going to dial up? None other than my man, Dennis Dick. What's up, dude? How we doing?
Holy,
Good
this is
morning.
one of those days, man. I'm having some bad luck right now, but
Oh,
it is
bad
what it
luck.
Again?
is. Damage control. Oh, Joel. I
Hey.
mean, I came in today short. I was bearish, and I'm somehow losing money. So I'm just in the wrong stocks today. But
That's just how
this
it
isn't the
goes
long-term account. I'm
sometimes.
talking the trading account. But I kind of had a feeling there was going to be follow through. Call it right. Short stocks, and somehow I'm losing money. But it's just one of those days where I'm literally getting hit on every piece of news, and there's not that much, but it seems like it's one of those days. So, anyways, we all have those days. What do you do when it's not your day? You work out of the damage control and you regroup, and that's it. I mean, as a trader, they can't all work out your way. Sometimes you're on the wrong side of bad news. It's just the way it is. So, anyways, yeah. So fun times here, but I mean, look at this market, and we've got put it in perspective first. S&P 380. That's the number of the day. We bounced there already this morning. It's the low of the move, 380.54. So that's the good news. The bad news is there's just, a pile of stocks that are down way the hell more than 2%. I'm trying to figure it out today how SPY is only down 2% because the majority of stocks, and yes, there is some stocks only down 2%, but I'm looking across the screen, Google's down 2.8. Microsoft 2.4, Apple 2.9. I mean, those are all more. But then you can go into the other ones like Nvidia's down 5.5, Tesla's down 4.1 on the 3-for-1 stock split, AMD down 4.3. Pile of stocks down 4 or 5% today. So 2%, believe it or not, is a gift. Really, it feels like only being down on the SPY because I feel like the SPY should be down more for where the stocks are. So it is what it is. I mean, They're going to buy it at the 380 SPY support a little bit here first time around. Maybe you find some buyers there, but this is just the market. After that CPI data on Friday, and you knew when we were talking about the CPI data that we were like in a little bit of shock that, it's getting worse and it's not showing help at all. And the market is readjusting for all of this. So, I think rallies are still to be sold. I think the market could go a hell of a lot lower yet overall. But, nobody really knows. You're kind of just throwing darts. We've priced in a lot of bad stuff. If they can get inflation in check, the market could start ticking higher here again too. So I don't want to be all cash. I don't want to be all stock. But it's a tricky market.
All right, so I want to add some details here for the sentiment of the week and kind of what we're going into here on Monday. So I know that not that many people pay attention to this, but the 2-year Treasury yield rose by 15 basis points to 3.2, reaching its highest level since 2007. The 2-year rate also traded above its 10-year counterpart since the first time since April. Yield curve inversion, which has been referred to as an indicator for recession. And then also the University of Michigan's gauge of consumer sentiment fell sharply to a record low reading of 50.2, down from a May reading of 58.4. The expected was a reading of 59. And so you can see there, definitely not going in the right direction. And this is the highest level since 2008. So this is not what you wanted to be seeing there. And also consumer sentiment there. So you can see everything kind of pointing into the wrong direction right now.
I give zero weight to all of that. So consumer sentiment, if you're looking at those for indicators to trade, you're wasting your time. We're absolutely wasting your time.
I don't think they're trading.
No, I think it's important you to mention it because everybody on CNBC mentions consumer sentiment and all this crap. It's all just a waste of your time looking and reading all that stuff. You can get out there and you can feel consumer sentiment for yourself.
That's true.
We can see what is happening here, the real world, what is happening. And the demand destruction, which hasn't shown up too much in the numbers yet, has for the automotives, is coming. There's, when the rates are going from this, banker calls me last week, got a 3.75% we talked about this, 3.75% for 1 year. Then the banker says, don't take it. It's going to be 4.75% next week. When you start talking 4-5% on guaranteed money from the government, the stock market is going to take a hit because it's long run stock market 8-9% maybe. Mm-hmm. You want to go and take risk on in this market to pick up 3-4 points. You got to start analyzing it. That's the trade. The TINA trade, there is no alternative, is dead. There is an alternative now. And that alternative is showing up as these rates continue to go higher. That alternative continues to show up. So right now, cash is king. The crypto's all crap. The stocks, for the most part, are crap right now too. There's going to be a buying opportunity. There is some good stocks out there. If you're 100% cash, I would nibble in. I would start nibbling because I think eventually you're going to have a rip roaring rally here. But to be the hero and say this is the bottom or 3,800, 3,400, all these analysts, calling it out all the time. Oh yeah, they're price targets. They don't know anything, man. None of these people have a crystal ball. They're doing projections and they say, well, if the S&P trades 17 times and we take the forward earnings projections, we forward out to, a projection of this. It's nothing to do with any of that. There's no traders doing that crap, and it's run by traders. It's all just short-term supply and demand is what's moving. Right now, there's a de-risking going on because everybody and their grandma was in stocks, making and killing it in 2020, killing it in 2021, and they're getting killed in 2022, and it's deserved because a lot of these valuations that people were paying were absurd. So this is the de-risking of the markets. You are seeing the deleveraging effects happen here right in front of you. You'll read about this in the history books, 10, 15 years from now, but we are in another full bear market. Don't kid yourself. I don't care if the S&P's not officially down 20%. It's been a bear market for a long time. So stop listening to analysts that have no idea what they're doing and saying, well, Mike Wilson says it's going to 3,400. It's got to go to 3,400. Nobody knows. Mike Wilson, good guy. Nobody knows where it's going. Nobody knows. So you've got to know your own situation and say, we've come off on a lot of stocks, 40, 50%. Some of those are deserved. Some of those are not. Buy good companies at reasonable valuations. going forward, and then you can go from there. But as a day trader here, to just say this is the bottom, I'm going to go all in at 380 because we're going to double bottom here, you better have a contingency plan. You better be getting out at 379. Stops are key.
I think
Yes,
the Tina thing. I just think the Tina thing is
it's
really
huge.
Yeah, it's just
Yeah,
there was no alternative, and now we talk about this too. What is your time horizon? What if you're someone like Mitch, or maybe perhaps young people with the younger demographics. It's a whole different thing, but there's a lot of people that, hey, I'm just going to retire off my Google. That's all I ever need. I'll just sell a little bit of that at a time. So just depends on your time horizon. It's hard to put more money to work in this environment. And the other thing too is, like, you got the bad news on the CPI data, right? It's kind of like Microsoft coming out. Like, Microsoft came out a couple weeks ago and they told you that they're going to have a great quarter, and still the stock rallied. Well, the stock market told you on Friday that inflation is not getting better. In fact, it's getting worse. And now we're going to have to wait another month, right? Another month away before we get that new data. I know, Powell can come out and say things, and the hearings, and now you're going to hear the next mantra, the next headline, if you want to anticipate headlines, is someone's going to go, we got to go 3 quarters in September.
Yeah, I've talked about that way before they talked about that,
Yeah,
Joel. You remember?
They always go. Yeah, they always go back and forth. We got to go 3 quarters. So
everyone called me crazy for bringing that up. I think you're going to start hearing more and more mentions of that. But
as soon as you got that CPI data that was 8.6, this Fed's not backing down. They can't. We need to see it in the 7s. That was we talked about this on the show for 2 weeks ahead of it, and saying it's going to be one thing or another. If it comes in line, I thought the market would sell off. If it came in hot, which it did, we said it was going to tank. And if it came in light at the 7s, it was going to rally. I mean, we didn't. We came in hot again. Everything the Fed has done so far has not shown up in curbing inflation whatsoever yet. It will work, but it's taking time. And how much time that takes, that's to be known too. There's still stuff going on out there. The demand destruction, which will occur, is slow. I mean, it's not like all of a sudden everybody stopped doing things. There's still lots going on. People still driving cars despite paying twice as much for gas. There's still stuff going on, but eventually the consumer will get strapped. First thing to do is they start borrowing more to pay their bills. At a certain point in time, they can't borrow more. No more credit card debt, and we've seen that from Zero Hedge. And we've seen that. Credit card debt is going up huge right now because people are trying to pay their bills. So they're borrowing from wherever they can. When they exhaust all those, that's when the real demand destruction starts. Exactly. So I mean, to come in here and say this is the bottom, we haven't even exhausted. People haven't been stretched yet. We've had rates up for a month and a half. It's early, folks. It's early, folks.
Yep, and it just shows you that, especially it's sticky, right? Especially things like rent. Rent is not going down anytime soon, at least of what it seems like out there. I don't know if you guys are seeing rent changing out here, but even in places like North Carolina, rent is still expensive relative to certain areas. I can't imagine places like, let's say, Miami or New York. The prices must be completely outrageous. We'll see how the stickiness affects. Let's change gears. Let's go into a little bit here into bankruptcy talk. It has started, guys. Revlon here, REV, preparing to file Chapter 11 bankruptcy, and this is not a good sign at all. It's already filing Chapter 11 bankruptcy protection as early as next week, according to the Wall Street Journal. So I think this is just a sign of what could be to come.
We have not seen hardly any bankruptcies. No, it's when's the last time? We haven't been seeing any. So this is just getting started. This bankruptcy party is just getting started. You can go through. There's going to be a pile of these nosebleed EV stocks that are going to go under. Believe me, it's going to happen. So, I mean, Revlon, maybe one that's been dying for a long time, not going to get a lot of headlines, but it's just the start. There's going to be a lot of this happening. This is what's going on around us. This is why, people are saying, that the stock market doesn't make any sense. It makes perfect sense here. This is what had to occur. The Fed is making this happen, and it needs to happen. So there's going to be a lot of little companies that are going to suffer through here, and it's just getting started. You're going to start seeing these bankruptcies pop up all the time. And I'm not telling you to come in here and sell all your stocks. So I want to be clear here. I'm trying to say is if you've been, just buying the dip, relentlessly buying the dip, and they're going to come back, know that that doesn't have to happen. It's all about your own personal situation. But like I said, if you were sitting, somebody in the chat said they're 100% cash. Well, I don't know I'd be 100% cash here. We've come off. So you just got to know your own situation, what kind of your time horizon, what kind of risk you can take on. For me, I've been 40 to 50% cash for a long time here now. I haven't really put too much more to work. I started putting a little bit more to work, which was a mistake. Every time you buy something, it pretty much is a mistake. So, I mean, we're just in this situation where you got to know your own, what your own personal finance situation is. So, but this is not this to get back to all-time highs. Again, I'm going to say it. The analysts that are saying we're going to make new all-time highs by the end of the year, I can't imagine the scenario to do that. War stops maybe in Ukraine and we get inflation check. Maybe it's possible, but are we just going back to buying the S&P 27 times earnings, Joel? I mean, that's what it was at the high. 26, 27 times.
And it's just a whole different market structure too this time. Last time everyone was good, man. Everyone was in the green. Like why, now there's going to be just overhead supply, and we just talk about that, all the time, and probably overuse the term, but they're just people. Hey, if Microsoft gets back to 270, if Apple gets back to 150, I mean, it's a whole different psychology. And
there's so many bag holders. Everybody's holding bags here.
Yep.
I'm holding bags in some stocks too. I mean, there's so many bag holders that, please give me my rally. Please give me my money back. I'll never buy a stock again. And, we've been in an environment that, a lot of times those bags, were lifted. 2020 bailed out everyone. 2021 was bailing out people too. And now getting bailed out this time. A lot of these stocks are never, ever, ever coming back. And a lot of them are going to zero. So a lot of these cryptocurrencies are going to zero. I'm telling you, they're going to zero. Not Bitcoin, maybe not Ethereum, but there's probably a whole pile of them that aren't worth anything. So, this diversified crypto portfolio, which I was telling you about this last week, that's just the worst way to play it. I think you buy, if you really love crypto, you buy your Bitcoin or your Ethereum or maybe your couple of main ones, but you start going and buying 25, 30 of these things, you're almost guaranteed to lose, in my opinion, because there's going to be so many that are worthless. So, I mean, it's not like those are companies that are cash flows. There's going to be a place for some crypto, but to come in here and buy them all and say, well, eventually all crypto is going up, it's not going to happen. This isn't the stock market. It's not on the cryptos. I think Bitcoin has a place. I do believe that Bitcoin has some value. That is not a zero, but there's a lot of these cryptocurrencies that are.
All right, let's go ahead. Let's transition here, guys. It's 8:28. In a few minutes, we'll be having on Tim Quast. Stick around, guys, for that. Let's go ahead. Let's get into some Tesla talk. There's a lot to talk about with Tesla. The first thing I'm going to do is let's go towards the first one that was given out. This was on Friday. So they filed an annual proxy statement with the SEC revealing plans for a 3-to-1 stock split here. And let me give the other kind of headlines, and then we can talk about the Tesla overall. Tesla also got an Indonesia invite to set a massive EV factory up. So this is interesting because, of course, if you know, kind of this area, Asian countries are known for their mineral resources, which could come in handy for Tesla and for manufacturing batteries. And then also the other headline that was on out there is that Tesla's firing Singapore country manager after Elon Musk warns of job cuts. So looks like somebody got part of that cut, that salary head count by 10%. So
Tesla, lots of individual companies. So on Friday night, they dropped the news that they're doing the 3-for-1 stock split, and the stock rallies 25 points on it. Another gift. You got to be, if you're in these stocks, you got to be selling into rallies, especially in the nosebleed valuations ones, because it just works. Sell the rip again in 2022 has worked better than buy the dip ever has. So, I mean, again, people rewarded just, immediately. You won't see it on the chart there, or maybe you do see it on the chart, Joel. Yeah, you can see it from Friday night. We're up to like 718 Friday night on the news that we all knew they were doing a split. They already had talked about it. It wasn't new news. And they rally at $20 on that headline, and then they start to leak it a little bit. And then obviously over the weekend, the crypto carnage and everything just collapses. And now we're down 4%. So Tesla announces a 3-for-1 stock split. Catches an upgrade from RBC. Is still down 4% today. So tough day, lots of positive news. Again, the email, there was an email that was coming that didn't help it as well, with Musk saying that thought it was a challenging quarter. Whether that's true or not, I don't know. But just expensive cars. I mean, cars, they're a car maker. They're not immune to people saying, I'm a little bit strapped for cash. Maybe I'm not buying a new car.
Yeah.
I mean, here's a stock that's actually benefited a little bit on Friday by an upgrade, right? And I just, for you guys that are trading this, short term, bad market, you got the upgrade. I talked about like filling the gaps, and this thing does do it. You had a low of 1798 on Thursday and a close of 1912. A quick pump. I mean, they got that thing up to 1850. So, today 83.74. That's certainly not out of the realm of possibilities if you're trying to get out of the mark, especially this is thinner stock the way it trades. On the dailies here, you don't have much to lean on at all. Your next daily low comes into play at 653.66. And this hasn't even taken out the low of the move yet. That's like the 620.57. So a big part of the S&P, trading with the S&P. S&P tests the low of the move. Let's see if that's in store for Tesla over the next couple of days.
That's the big number there. I think the Tesla could, I don't know. They got the email. So you got, the upgrade, the 3-for-1, pushing it higher would be the facts. And then you got the email that pushing it down. And then you got the overall market pushing it down. Nobody knows. It's hard to say. I do agree. 620, 625. I mean, that's huge support down there. So we'll see what happens. I mean, where are we talking? It's almost cut in half, right? $1,243 to $6. But I mean, the valuation here, people will say, Tesla. Yeah. I mean, we're not in Kansas anymore here. You want to pay 100 times earnings for a stock? No, thank you.
Yeah, and another thing to keep in mind, right? And we'll talk a little bit about this with the Chinese stocks when we get into that next after Tim. But I think it's important to keep in mind that they mentioned that they were having issues when they were locked down. And now we're seeing re-lockdowns that could further affect Tesla, right? In Shanghai and further affect their production numbers that are coming out of Shanghai. So I'd be paying attention to that, but we'll see what happens. Right now, Tesla, to me, if it can come back through that 688 level, I don't know why I have that so prominent, or 700 today. Okay, then maybe we get a little bit of a bounce. But right now, it's looking like it wants to head through the 650s. We'll see what happens. Let's go ahead. Looks like we'll be getting Tim in just a couple of minutes here. He should be joining on in here. We can talk a little bit. Let's talk a quick topic here. It isn't too much stock related, but why not? Box office tickets that are coming in. Jurassic World Domination tops the domestic box office. Let's take a look at AMC with this one. Top Gun adds 50 million in its third week. I don't know if you guys are big Top Gun fans or Jurassic World fans. I'm a little bit of a Jurassic World fan, but I don't think I'm going to the movies anytime soon. But I did see the local movie theater because I went to go pick up a pizza, and it was slammed. And that's the word that I'll use, slammed with people. Like, it was like everything sold out. So I don't know if the movies are coming back into favor. The chat, I'll leave that up to you guys, but I'll throw it to Joel Elconin and Dennis here.
People still want to do stuff. There's still people, like I said, the consumer is not that strapped yet. It's just starting. So, I mean, if we get, an ugly enough, there'll people stop going out to eat. There'll be people stop going to the movies. That stuff will stop if it gets ugly enough. But that's cheap entertainment. Movies are still cheap entertainment. Let's go do something. Let's go to the movies. It's cheap entertainment. People haven't been doing that for 2 years with COVID, especially in Canada. I mean, movie theaters were closed a year ago in Canada. So, I mean, different countries, different things. I'm not surprised that we're still seeing people want to do stuff. It's still busy out there. There's stuff going on. But it's the big ticket stuff that gets hit first. And that's why we've been saying with the automotive makers, didn't like those. AMC, I mean, you can't do anything on valuation, so you can't really even talk fundamentals on it. It's a good movie, drive it up. Yeah, but then the Top Gun was up that day, and then it just sold right back.
Yeah, right
off.
here.
It's not
right
even
here.
getting a response to this movie here this morning. It's down 5%. I mean, how do you trade this stock on fundamentals? You can't. This is all sentiment. If GameStop starts going, then AMC starts going too. So it's its own animal. It does its own thing. I wouldn't worry about fundamentals in the stock.
Opening into a pair of lows here. You did have a pair of lows after you had that run up on following the Top Gun movie. So pair of lows at 1180, your pre-market low right in that area as well. Of course, resistance would be at 1207. You could easily get a gap fill on that one. That was Friday's low, and I'm sure a lot of people would like to see Friday's close at 1243. Haven't looked at GameStop in a while and traded down $7. Things are kind of, well, you're three lows in one area. If you think you want to take a let's call it 116 next support level for GameStop.
How do we get to
Well,
GameStop on that? I guess I brought it there.
AMC.
Yeah,
and
they do.
It's always
They go together.
relatable. Come on. All right, so before Tim Quast kills me too much for talking about AMC and GME here, let's go ahead. Let's bring on my man here, Tim Quast, the founder and CEO of ModernIR and Market Structure Edge. I'm super excited to get my first, and I can't wait to play it because got to go ahead and play it up here. Market Structure Monday. All right. Let's go ahead. Let's bring on Tim. How we doing, Tim?
That wasn't much. That was just what happened there. You got cut off.
It was there, but it was well done, Mitch. I thought that was a very excellent Market Structure Monday rendition.
Good to see you. Got to bring the energy. It's Monday, right?
It's
Monday comes the energy. I like to say, a lot of people look towards the weekend, but if you're a trader, you look forward towards the Mondays, and I think that's important. Let's get at it. What are you seeing out there right now, Tim?
I always hate it when the weekend comes along and interrupts my work. It's it really interrupts the flow.
Addicted to the markets, as I like to say. Addicted to the markets.
Well, and I'm sorry I missed you guys last week. I really wanted to do Market Structure Monday from Jackson Hole, but the weather interrupted our carefully laid plans, and we had to change our departure to go to Yellowstone. So we had to leave
a little extra fun time.
Right, we had to leave really early, so I had to skip it with apologies. So what are we? Well, I what have you been talking about this morning? Is it Bitcoin? Okay. Is it the S&P 500 opening in bear territory? Is it the 5-year? The 5-year Treasury is at 3.4, 10 years at 3.3. I mean, there are all kinds of those factors, which, I pay some attention to, certainly, but that's not that's not the piece of the puzzle that Market Structure brings. I listened to Katie Stockton from Fairlead Strategies. She's a great technician. That's Joel, you're probably a pretty good technician. I don't know that stuff. Support and resistance, that's not what I pay attention to. To me, the piece of the puzzle that we can bring is, how is it possible for everything to be fine and then all of a sudden the market just deteriorates, just implodes? And then we say, well, people were shocked by the inflation figure, 8.6% instead of 8.3%. I don't know how you could have been shocked. I mean, we know that these conditions exist. So that is not the whole of the explanation, Mitch. So it's a long-winded answer, but here's my answer to how these things happen. Part of it is market structure, the rules that govern the way that the market works, and there are flaws in it. Whoever remains, can set the price. So when everything's going great and stocks are rising and Bitcoin is rising, there comes a point where it's a bridge too far. The problem is, what is the bridge too far? Nobody knows. Everybody will chase things until suddenly, at some point, there's no other bridge, and then the action stops. And then what happens? Well, whoever remains in the market gets to determine the outcome. Well, who is that? Well, the last party to leave are high-speed traders, high-frequency traders, and anyone can set the price. It's very important, traders. So listen to this very carefully to understand that the way that the market works does not necessarily reflect the sentiments of investors. You could be sitting on your positions and not selling a thing, just like everybody else around you, and the NASDAQ will go down 300 points. How is that possible? Well, it's possible because of the mechanics of the market, where short-term machines that set the bid and the offer they can trade. They don't rely on someone else being there to trade. They can do it on their own. They have their own proprietary strategies. They can manufacture stock. They can see all the information globally. They trade globally. They know what's happening in Brazil at the same time that they know what's happening in Europe or in the US. All of those things are interconnected. So you can't depend on economic signals, fundamental signals. All of those things they're important inputs. I'm not dismissing them, but it's why market structure matters. This, and I'm biased. I believe that this is an important part of the puzzle, but that's what occurs. So then, what do you do to defend yourself? You should be very aware of when it's a good time to trade and when it's not, and those are things that are mathematically measurable. I will it'll sound like self-congratulation, but we were telling Edge users all last week, look, broad sentiment is now above the red line. It's above 6.0. We know that when it gets to 6.5, it's just a read of demand. It's a bridge. It is the bridge too far. Once you've crossed the bridge too far, you now know that the probability, I've run these probabilities, when broad sentiment is above 6.5, and I'll show you, traders, what I mean, over the last 18 months, the market has declined between 4 and 5%. So the probability is a loss. If the data are telling you there is a probability of a loss, why would you trade? Well, it's the hardest thing for human nature. You've just had 5 or 6 great trades and you've made a bunch of money and you're thinking, well, I'll just do one more. I'll be fine with just one more. And then the bottom drops out. So you have to stop before you get to the bridge too far. It's not more complicated than that, but you can't depend on your rationality, your emotions. You really do have to rely on math. And I think that's where market structure can help you.
Well, I'm sure everybody's asking, and that's where we were. Now, where are we now? So let's go ahead. Let's take a look at market structure Edge here and see what we're going to right now. It's definitely interesting. And I like how you noticed that it's important to know when to hit the gas and brake. I think that's the most important thing as a trader. And definitely market structure Edge can definitely help in that sense.
It can. There's no perfect tool, but it does reflect these rules that govern how different market behaviors come and go. And that's what matters here. So when I said broad market sentiment, that's what I'm referring to. So if you're as the hashtag Edge Mob knows, this is the dashboard. This is what I look at every morning. And the point here it's to help you become a better trader. That is the point, and I will use the tools that I'm familiar with. There other folks will be familiar with other things. So broad market sentiment is merely a way to understand the heat of the market. And the market tends to trade between 4 point. It's just a normalized 10-point scale. So we take these inputs that are the reasons people buy and sell, including high-speed trading, which we call fast trading. There's passive investment from indexes, ETFs, and quants. There's stock picking. There are people who trade derivatives. Those are the 4 big inputs, and they create a heat map of what is occurring in the market. So when broad sentiment gets above this red line, let me zoom this in. It's just a mathematical read again, but it's been a very good indicator. This was true back in March. When broad sentiment rose above the red line, we were concerned that the market would go down, and son of a gun, it did. This is SPY, and when the green part gets below 4, then there's a high probability that the market is bottomed, and it's just human nature. There is fear and greed. At some point, somebody up here will say, "Well, this is a bridge too far," and then somehow over here, somebody will say, "Well, they go by." And so how do you know? Well, how do you know? Well, this is as good a way as we've ever found to know. So when broad sentiment got up here above 6.0 and then above 7, we thought, that is the likelihood that the market goes down is very high. Then look at the supply side. That's the next graph down here. This is short volume. So here's the trend line. And look at the supply side. It was skyrocketing. So what happens if everybody doesn't advance to the next bridge and you have all this excess supply? The market is going to fall apart. Well, you can actually see those things in advance. It's not perfect, but it's not guesswork. It is actual math that says, okay, the supply demand equation is not great here. And so when that condition exists, you want to stop. And I'll give you one other little thing here that we observed. We put two key portfolios on the dashboards of Edge users. One is big and stable. This is the stuff that you should do when the market is volatile. And there are only 4 companies in it, and it's being led by fast trading. So machines are setting the price. They're much smarter, and they want to fool you. And there are only 4. When there are double-digit numbers in that portfolio, then you know you have a lot of opportunity to trade volatile markets. So right there, saying, well, don't even that's not very good. Then we go down to momentum, which is the exact opposite behavior. So you have low volatility. Can we just trade things that won't move a whole lot, but will do better than the market? Or can we trade things that will outperform the market? And that's momentum. Well, there are only 3 in it, led by the same behavior. So if there's nothing in momentum and nothing in big and stable, then you shouldn't be in the market. It's not more complicated than that. And it's just really difficult for us as human beings to say, no, I'm just going to accept what the math tells me and sit this out until these things improve. That's
At what
Tim,
point? At what
Go ahead.
point, Tim? I mean, and now obviously we know if we get these 2 serious sell-off days in a row, bang, bang.
Yep.
Everything obviously changes. At what point do you start nibbling back in here? Like, so obviously you just wait until it starts to turn. Like show us on your charts where at what point, because it's so many people. I get this every day. You get a big sell-off. What are you buying? What are you buying? What are you buying? I'm just curious. At what point do you start nibbling in here?
Well, 4 things to me matter.
Okay.
So number 1, the broad market sentiment, the demand side of the equation has to come back down toward 4 and preferably below. How long will that take? Well, I would say it's the other side of number 2, context, options expirations. Options expire Wednesday, Thursday, Friday this week. Leaps expire on Friday. That's a pretty big deal. When you have a lot of volatility, people are going to have lost money. There's round 2 of the Russell rebalances. Next Monday, week from today, next market structure Monday, there will be new options trading. That could be a great day, could be a terrible day. It depends on whether people come back to reset things. So there's number 1, does this come down? And also the supply side needs to come down. Number 2, the context. Are there options expiring? Are there important things going on? Number 3, do we see in supply in big and stable? Is there a return of, does this jump to double digits? If it goes from 4 to 10, then I know I could trade a volatile market. If momentum goes from 3 to 15, now I know there are a lot of momentum opportunities, and I'm going to isolate those best ones. But that's it. What's broad sentiment? What's context? What's big and stable? And what's momentum? And if those signals aren't there, then you just wait. You just have to sit on your hands until they change.
So going back with the history with the options expiration, I know we've had some extra, volatilities with the gamma unwind and things like that of that nature. So when like to anticipate, the unwind or the expiration on Friday, do you follow? I mean, do you follow the sentiment going Monday, Tuesday, Wednesday, Thursday, or for you just go with the Thursday reading? And as far as the indications for Friday's activity,
if the market is down, well, it's already been down pretty sharply.
Correct.
So if there's a big drop ahead of expirations, there will be a temptation for traders to try to chase prices of options up, and I'll explain what I mean. So and you options traders know this better than me, but options have time decay. So the closer they get to expiration, the cheaper they get. So it makes it possible for traders with some muscle to go around and buy up heavily time decayed options and then buy the underlying equities maybe on Wednesday, maybe on Thursday, and try to move the market. It's a dangerous gambit. But you should realize that opportunity and that risk both exist. I would look at it this way, Joel. When I see this kind of convergence between the supply side and the demand side, I don't see how that fixes itself till we're out of expirations. So I'm going to be very, very cautious. These little green squares here, those indicate the historical points where options expired. Monthlies, month end, monthlies. This sometimes they're split into 2 weeks and month end. And you can see that each time this has been this is the only time where it wasn't volatile, but it was a shallow bottom and it fooled everybody. And that was a challenging period. Here we had a really strong right at options expirations. Everybody chased prices. That was a pretty good entry point. But notice how quickly it deteriorated. See the same thing. If sentiment jumps above the red line and supply jumps way up, look, you should get out. And that's where we are right now. We have very high demand, but it's falling. It's got a long way to get back to 5, which is just even. And then the supply side is it's extreme levels. 49% of all trading volume in the S&P 500 is coming from borrowed or created stock. The market is almost half short. So without demand, it's going to go down further. I just find that I wouldn't touch that, Joel. I don't want to be near that.
Okay, good. That's what I want to hear from you.
All right. So the last question, of course, is there anything to trade, right? Is there anything on out there? And just to give a little insight later this week, guys, on Wednesday, June 15th, we'll be having the Benzinga boot camp, and I'm going to do my best to host that. So stick around, guys. We'll have Tim on there. What's looking good out there, Tim?
Yeah, I think it's 10:35 a.m. Eastern time on Wednesday. I will take you through in some detail how to understand good entries and exits just using supply and demand. You don't have to know charts,
guys.
Fibonacci's, don't have to know any of that. Just supply and demand. Well, I'll tell you, Mitch, as we said in our market desk note, I have a very difficult time finding anything that is good. I could point to 2 deal stocks that for some inexplicable reason are trading at significant discounts. And I don't know. I said in the note, it deserves some research, but I could look at Citrix and Rogers Corp. Both of Citrix is being taken private by private equity. Why is it at a big discount? I don't know. Rogers Corp being bought by DuPont. I don't know why it's at a big discount. I didn't see any news. Those would be 2 that would be interesting, because if those deals are going to close, you have a pretty significant opportunity to make money in any market. But I'll say once again, there may be some news that I'm not familiar with that explains why that discount exists. And the only other thing, Mitch, that I could point to, I run this diverging liquid passive portfolio. It's a dynamic portfolio that uses criteria that I've set up, that I want to go look for where passive money is leading and where there's a significant supply-demand divergence that offers opportunity. There's 1 in it. That tells you how bad the market is. There's nothing to trade, but this is interesting. Shockwave, why? I don't know why Shockwave is doing fine, but if you look at Shockwave here and the supply-demand equation, notice the stock rose when everything else fell. Well, it's got rising demand and supply that is right at trend. That could produce gains. But again, going into options expirations, I'm very cautious. That's like a black hole. You cannot see the other side of derivatives trades that are occurring over the counter. And so that's why they're so challenging. We can see how things are trading on exchanges. What we can't see is the 50% of the derivatives market that is over the counter, and it creates great risks. But those are the only things I could find, Mitch.
Hey, it's a tough market on out there, that's for sure. But definitely come out there, guys, on Wednesday, 10:35 a.m. Eastern. Tim Quast will join us, go a little bit deeper into Market Structure Edge. And thank you for joining us, like always, for Market Structure Mondays.
Happy to be with you guys. Good to see you. Have a good week.
Thanks, Tim.
All right, guys, let's go ahead. Let's talk a little bit about China stocks before we get to the bell here. I don't know if you guys see anything with the overall charts, Joel. You can always mention there. But did want to kind of mention Chinese stocks are down right now after re-lockdown mentions. There's a bunch of these stocks that are now showing some downside here in pre-market, and they were really down in China markets. Let's take a look there. NIO is another one to kind of mention, and I think with these re-lockdowns, it's just danger now coming back into it. So
It was
Dennis,
another fabulous selling opportunity last week. When your stock starts taking off like Alibaba and goes up 17% in one day, what do you do in a bear market? You sell it. And here you are 3 days later, and it gives it all back. So again, when you get the big pop in your stock and we're in a bear market, you sell. That is what you do. And again, sellers rewarded. Blindly shorting the rip works again. I mean, this you just got to understand the overall environment. So I just don't see any reason to come in and say this is the bottom at 380 and we're all going to go and we're all going to go back to all-time highs. So if you take all-time highs off the table, what are you coming in for? I mean, yeah, Alibaba's oversold, but there's all kinds of other problems too. I think you just got to blindly take the money and run when your stock rips higher on news.
A little bit of a potential gap fill here. I'll just give you that. 104.46 fills the gap. Just the problem is the next daily low is 99.42. With the momentum this has with the extremes, I think that even could be a little bit early. So we'll see under that. There's not much support under that gap fill. Next daily low 99.42. I guess the best thing looking right is if this next couple days can finally hold 100, have a few sustained closes over 100 for Alibaba, but just bad news coming out of there with continued lockdowns and massive COVID testing. So overnight move in it to win it again with Alibaba, or in it to lose it, depends on what your position is for Alibaba.
well, be careful with those bars because Beijing's local government said that the outbreak was linked to a popular bar. So be careful with those popular bars, I guess. Let's go towards here.
Chat's
Last
mentioning
headline.
Roku. Can we mention Roku?
Yeah, let's go to it. But really
Here
quickly,
the
just want to.
absurdity of the rumor
Yes.
from last week. Again,
I
giving
mean,
you an opportunity to just
great
sell into
opportunity.
stupidity. Pure stupidity that this was going to get bought by Netflix. It's not happening. Maybe I'm wrong, maybe it will happen. The odds is happening are very, very, very low. Netflix has their own problems. The last thing they want to do is play nosebleed valuation for Roku. But anyways, last week, rumor Roku's going to buy, or Netflix going to buy Roku. Take the stock from 85 to $105. 3 days later, it gives it all back. Sell nosebleed stocks on all rips.
Yeah, that's how it's been lately. Let's take a look at what earnings we'll get after the bell. We get Oracle and Braze. Maybe let's take a look at Oracle to see. I know a lot of people will be expecting to see that earnings report. What are you guys seeing here on the chart, and how do you guys feel about Oracle?
It's a value stock, which is the good news. The bad news is that we have seen value tech just getting hammered as well. So I think there's some value in Oracle. I actually didn't even realize that I had sold my Oracle, but I looked at my portfolio and it's gone. I don't know when I sold it. I can't remember, but I've
nice
sold
ones.
it. I'm sure I've sold it in the last year. So I'm sure I've sold it higher. I'm actually looking to rebuy my Oracle. I think if it gets down to $60, I think I will rebuy my Oracle. So it's coming to a point where actually, they're starting to get some value in a stock like this. This is more, at least you got a floor. You're buying stuff like Roku, where it's trading, whatever, 90, 100
you have
times
no
earnings.
idea. Yep.
At least, when you're buying stuff that's got cash flow, making money, at least there's a floor somewhere, and the floor isn't zero. So Oracle's not going to zero. There's a lot of other stocks that are. So if I'm buying any stocks, I'm buying stocks of companies that have cash flow. Kramer's been saying this. He's absolutely right on this part. Buying stocks, making money, have cash flow, because they do have a floor. I don't know where that floor is, but it's not zero. So that's the good news. The bad news is the stock continues to go down. I think 60. I kind of like the 60 level, Joel. Maybe I'll throw it out to you, but I'm looking at maybe putting this one back in the long-term portfolio.
Yeah, new low of the move here. Prior low was 66.75, and you're trading below that on 24,000 shares. This one, maybe going into the report, right? Did people will be like, they could, because it usually sells off into the reports, and then a lot of times good report. Obviously, I remember this day when it went absolutely bonkers. That it made the all time high. That was actually a day when it got into 100 briefly. That was on the earnings report. But Dennis, what you're referring to on the monthlies,
Yeah.
yeah, 3 lows around the 60 area, going back to Dece of 20, January, and February 21. So that's good levels, and about $6 away. But I expect to see a little bit more, a little bit more strength in this one today, just heading in to the report.
All right, let's go ahead. We're going to go ahead and wrap on up here. It's
Sure.
9 a.m. here, guys. Definitely pay attention. There's going to be a lot going on out there. Of course, a lot of focus going towards Wednesday and that FOMC meeting. Joel Elconin will definitely be going through some tickers. So if you guys want to go ahead and join Joel, he'll be on PreMarket Prep Plus. Who's the guest for today, Joel? You got one?
I was going to have Brent on, briefing with Brent, but he's a little under the weather today, so I'll just ripping through some symbols. But check in with you guys later on, and go get them, Triple D.
Well, maybe Brenty's the one checking all those Redbox movies out.
It's one of those days where you hit on a little bit of bad news, and they're on the wrong side of a trade. It's one of those days where I felt like I kind of had a call rate, but I still make money. You're gonna have those days. It kind of ticks you off when you actually call the market though, and then you lose money, and you're like, you just did it wrong. So I mean, that's so I'm obviously bummed today. Obviously the long-term investment portfolio continues to get hammered. I'm 44% cash, and it just gets hammered anyways. I can't imagine being fully invested in this market. It's got to be awful because now my long-term investment portfolio I think I'm 15 or 16% off the highs, and I've been half cash the whole time. I'm like I have to look and see what I'm off the highs. It might even be 20% off the highs, but it's just the 20% S&P doesn't do it justice. It doesn't feel like we're down only 20% on stocks. It feels like it's a lot worse. And I've been half cash, and I think I'm close to that. So, I mean, if you got anything that's got remote risk to it, some of these stocks down 40, 50%. It's not the end of the world. We're not in the end of times. I do think, if you've been sitting on 100% cash, congratulations. You've been absolutely correct. I wish I was 100% cash. Hindsight capital is always 20/20. I do think if you're sitting on 100% cash, I think you got to slowly start nibbling on good companies. I gave you one Oracle today. That's what I'm looking at. If it continues to go down, I think the 60 level, if you could go wrong at 65, I don't think so. But I just think you got to stay away from stocks that are trading 60, 70, 80 times earnings yet, because those multiples are still retracting.
It's going to be something definitely to keep on watch out there. I'll let you go ahead and go into the market, Dennis. You do what you do best, and that's
Thanks, Mitch. You're doing a great job, buddy.
All right, let's go ahead. We're going to go and wrap on up PreMarket Prep. But like always, guys, this is only for educational purposes only, not to be used as investment advice, and opinions do not represent those of Benzinga, and hosts and guests may maintain positions in the security discussed. Up next, we'll be getting into some live trading action, so stick around, guys. I know all you Redbox traders wanted to talk about it, so come on over to live trading. I know Zunaid, Ryan, and I will definitely cover it. So we'll go ahead and continue going throughout the day. And don't miss, guys, today I'm going to continue on with my brand new show, Stock Market Movers. That's at 1 p.m. to 2 p.m. We'll be having Thomas Hayes. Definitely stick around, guys. One of the things with this show is that we're going to be bringing the expert opinions, just like we do on PreMarket Prep. We had an expert opinion, Tim Quast. We're going to continue going. So I'll see you guys there. That'll be at 1 p.m. But up next, let's get on over to some live trading action and go make some money, guys. I hope that you guys have a great day, and keep on mind, it's a choppy market on out there. I expect to see some more chop. We've already gotten a big decline in pre-market. We'll see what happens here towards the bell. Keep battling on out there, guys, and keep working on your trading.